What is income planning? We accumulate during our working years, spending, saving, and investing income. We decumulate during our retirement years, spending the savings, investments, Social Security, and maybe a pension or even a salary from a part time job. If accumulation is how we climb the mountain, decumulation is how we descend. And income planning is the roadmap for that descent, considering personal needs, assets, and current tax law. Welcome to Adams-Hansen and Associates Introduction to Retirement Income Planning for Retirees and Near Retirees.
This series of tax and financial planning seminars is provided through your tax or legal professional and presented by Adams-Hansen and Associates, an independent registered investment advisor based in Minnesota. Watch them all or choose the ones most relevant to you.
In addition to this introduction to retirement income planning for retirees and near retirees, we've also included retirement income and Social Security planning, understanding tax reduction in retirement, and understanding and reducing your fees and expenses.
They are all about income and tax planning. Either planning for retirement, making decisions about Social Security, or minimizing taxes through harvesting of income. The goal of the larger presentation is to help you intelligently design an income plan that is obtainable and efficient, and to give you the information required to create it.
These are the items we will focus on in the first section. Establish your basic expenses. Understand your controllable variables. Determine your ideal retirement date. And contemplate the decumulation phase.
Make a list of current basic expenses. Make sure you list 401k contributions. Also highlight other expenses that will change. Your taxes will be different in retirement, but for now we are establishing what percentage of your current expenses will remain in retirement and how much income will be necessary to live your life. There are limits to what you can control: taxes you pay, which type of money you spend and when, and premiums and fees you have. Those fees include cost of funds, platforms, and management. How much income will you want at different stages of retirement? Will you want more income now, less later? How important is it to you to leave assets to your children or grandchildren? We need to understand which risks and events can derail our planning. The market can affect you if you don't have the right type of asset mix to weather the inevitable storms. Taxes you can manage to an extent. Inflation you really cannot. Long-term care in retirement has unique risk. Another risk is the cost of insuring against the risk of long-term care. Long-term care insurance is expensive, rarely gets used, and is not always tax deductible. This chart shows how much a person needs to earn to recover from a loss. The real problem is spending substantial amounts of assets that have substantial losses, or worse, getting out of the market after you've had a substantial loss. The market recovers, but when we sell shares at a discount, they're gone, and they can never recover. The key is to either not need the income, or to have assets in place to take income from in accounts that are not directly impacted by the stock market. One of the most important variables is the taxation of variable assets. Harvesting the most effective income based on the facts is critical, and not all that difficult, provided you have assets with different characteristics. There are several items that are just fundamental. In a future presentation, we talk about creating buckets or sleeves of assets that make it easier to actually do some of these common sense things. These are things we often see that can have a very adverse impact on people's long-term wealth and peace of mind. Sometimes people are spending a lot of money on things to solve problems that do not exist, or can be better handled with the assets on hand. Sometimes people let things drift. There are specific financial products that have lost their effectiveness based on a number of circumstances. Or income is sufficient, so people simply don't think about more efficient ways to manage their income and inheritance. As advisors, we will use our skills and experience to help you design a plan based on your circumstances, but we will generally not audit credit card expenses. The next presentation gets you into more detail about positioning your assets and the best ways to manage taxes and timing.